Welcome to Charting the Markets on this midweek trading session, 5th of June. We're taking a look at a number of interesting aspects of the markets at the moment. And as we await the interest rate decision today from the Bank of Canada, tomorrow it's the European Central Bank. And then further out, of course, we continue to monitor what's happening with the dollar because of the Federal Reserve and their moves on interest rates potentially later on in the year. Also in this mix, we've got the Bank of England, and of course, more immediately here in the UK, a little bit of a nod towards the election, although it doesn't seem to be steering the markets at the moment. Anyway, let's catch up with our guest for the next 15 minutes. It's Serge Berger from thesteadytrader.com, who joins us here. Serge, welcome. I want to kick off, first of all, though, with one of the key topics of conversation we've had over the last few months or so, and that's what's happening in the US markets and the Nasdaq particularly. This is a growth led market, and it's been very sensitive to interest rate calls. But I can't help but think that there's another record high potentially around the corner. What's your thoughts about what's happening at the moment on Wall Street and the Nasdaq particularly?
Hi, Jeremy. Yeah, I mean, more or less, the story continues that you and I have been talking about here for seemingly almost 12 months now, which is really that this is a story of basically AI. And I think one thing has changed here in the meantime over the past number of weeks, basically since the Nvidia earnings, which is really kind of what's tracking this. And I'll touch on this in a second, but just to give people a basic idea here, the Nasdaq 100, it's not necessarily stretched in terms of its sort of, being above certain moving averages, that kind of thing. It's just that it's relentlessly tied to one stock, and we all know that stock, it's Nvidia. This is the correlation of essentially the Nasdaq versus Nvidia. Nvidia here is in orange, clearly outperforming there. The issue that we're seeing here over the past few weeks since earnings is that the people that are now buying Nvidia are not so much people that are loving it from a valuation perspective, but rather it's passive flows and funds that have to buy the stock and add it to their holdings, or add to it, and just to be able to keep up with their benchmark weights. So this is the kind of stuff that can change rather quickly if and when and you get a sharp mean reversion move. But until then, it's essentially it's a kind of a game of musical chairs, and that's kind of where we are. So we don't want to fight it, but I think trying to go and double down on this is probably not the best idea either. So, limited upside as far as I'm concerned, the Nasdaq, but again, still in a bullish trend. This kind of the theme here.
Yeah, let me just focus in a little bit more on Nvidia, because this is an amazing story. I'm noticing actually the weekend there was another announcement from the company. Jensen Huang, the chief executive, has now got cult status. I noticed he was signing people's shirts and things. I mean, this is not a chief executive. This is a pop star or rock star. But he's got this sort of status, and Nvidia just goes from a big news headline story to big news headlines. And as you say, along the way, record high after record high. Technically, how do we approach this? What do you do about a stock that continues to strike out new all-time highs?
Yeah. I mean, you technically would have to just kind of trail it, right? Meaning like, be long it. I'll pull this up here so we can just look at that stock itself. Technically, it's just a matter of trailing it. There are near-term moving averages, like something like the, 8 and then ultimately the 21 period moving average, or simpler ones. I mean, the fact that the stock is now once again, and it's actually even up pre-market now, 12% above its 21 period moving average, being the yellow line, it just gets very stretched. But that's basically the thing to do, is just trail this thing. The issue really is that when mean reversion happens in stocks like these, they typically aren't like 5%, nor do they happen slowly. They happen pretty quickly. I mean, memories run short, but the stock had a 22% corrective move, just in April, basically. So at this point, there's a lot of downside, a lot of gaps underneath, particularly the post-earnings gap that would fill around 960. easily can fill very quickly. It doesn't have to right away, but can once the wheels are in motion, and that quickly gets the stock down 18%, call it 20 to round up, right? So it happens really quickly. And the trouble is when we chase these kind of names, one can make a lot of money trailing, but then very, very quickly give up, 80% of the gains that took weeks and months to accomplish. That's why I'm more of an investor in these kind of things rather than a trader. And if I do use trades, I try not to do directional trades. I try to be a bit more creative or risk averse using options.
Yeah. Look, what we're talking about indices, we're talking there about the Nasdaq. Let me just quickly bring another one in, the DAX, which is quite a heavily traded index. Like the Nasdaq, it's had a little bit of a retracement. I say a little bit because it is, in the grand scheme of things, it is just a small retracement in the last couple of 3 weeks or so. Have we seen a top? Or technically, again, let me ask you, is it more likely we're going to get another record high rather than a lower low?
Look, obviously a very good question. So here are the simple metrics. I mean, at the end of the day, this is an economy that's come out of a marginal recession last year, and it's kind of reaccelerating. So does that mean it has to blow higher right away from here? No, it can easily consolidate. This is just that green line is simply the diagonal line connecting the tops since 2007. I'm reluctant being short these kind of things. I'd rather wait for retracements and then buy them. At this point, is it overbought in the immediate term? I think it is, but it has surprised me now for several months. So, that latest breakout, I didn't see that it has a high probability chance of taking place until I saw the economic data backing it up. We live in a momentum world, and that's what people trade, because we have a bit of a gambling bubble too. And so I just would wait for all these things, whether it's Nvidia or DAX. I'd wait for retracements, where we get better entries. So with the DAX, why can't this thing correct, 9 or 10%? That would be very healthy. Get it back down to, 16,500 or so. That would be lovely. Does it have to get down there? No. Would it be nice for a better reward to risk? That's really what we're always looking for. Yeah. If you're technically inclined, that's the 50-period moving average as well, roughly, give or take, maybe a bit higher. I'm much more comfortable looking for retracements at this point than trying to chase.
You mentioned momentum. We've seen some momentum pick up on Brent recently in the opposite direction that we're talking about on indices. Some really interesting trades. In fact, psychologically, it's quite interesting talking to technical analysts about passing through some big numbers. Brent has recently passed through 80 with a very strong candle on the downside, which gives me some hope, potentially, possibly, we could see some more downside to come. But we're at a support level at the moment at 76.58, around that sort of level, which were the lows we had back in early February. Again, from a trader's point of view, how comfortable do you feel about where we are on Brent, and is there more of the downside momentum to come?
Yeah, I think the reaction we saw to OPEC was probably a bit overdone, and I would be more of a fader of the move, meaning a buyer of this, rather than trying to go with it, because at the end of the day, you would need a pretty quick economic deterioration. There's no talk of massively flooding the market with oil right now, from the OPEC countries. So I think this was a bit more technical than anything. We're heading into the summer here, and at the end of the day, if anything, demand is probably going to pick up. So I was talking to a client earlier this morning, actually, and I used the term reluctantly. This may be somewhat of a gift to get back into oil for at least a mean reversion trade back into the low 80s. So we've seen this many times before, right? Oil makes a move on the back of OPEC or something like that, and then everyone gets their hopes up in one direction or another, and then it just basically goes back the other way. So I would be more of a buyer here rather than a seller. Can it go a little bit lower? Of course, but energy in general has a lot of tailwind secularly as well, not to forget.
Yeah, let's stay in the commodity space. Another area of the market that everybody always asks about, and IG clients are no exception. That's gold, and it's very difficult. I was on the early morning call with clients this morning. We were trying to discuss where we are. We've got this sort of little recent sort of floor being established now around about the 2300 level. Do you think there's just more sideways movement to come? What sort of breakout are you looking for?
So gold has had a big move, right? It's a big outperformer year to date. So I think consolidation here is probably healthy. It was trying to make a run here, back to new all-time highs just a couple of weeks ago. Couldn't sustain that. I think, some of that had to do with like end of month stuff, or as we were heading towards the end of the month. I don't want to fade this. I think this is a very strong trend that we see lots of institutional investors behind it. If you look at this just from a very simple long-term perspective, just so we kind of give everyone some perspective on this, there's really no reason to try to fight this. It's really just this is a massive sort of base breakout. And again, if you look at it from a structural perspective, there's a lot of tailwinds. Central banks buying almost indiscriminately. So, is it going to continue at this rate here right away? It's anyone's guess. But I wouldn't fade this. I think the demand is too real. So, for gold, we're looking at this here in futures terms. But to me, 2,500 is this year's business, and then we'll see. We'll see what the momentum brings. But I think the second half of this year is going to be a bit of a different tone anyway than the first year, where we had basically a big risk on move. So I would not be short this. If anything, I would be adding longs on dips, very much kind of like we were talking about the DAX, or maybe even Nvidia if it pulls back enough.
Yeah, talking about some of the background fundamentals, looking at copper. Copper's an interesting one. We've been talking a lot recently about this bid by BHP, which has been refused a number of times at Anglo American, and it all seems to be about copper. Copper, we're hearing, is one of the key component factors of this idea for us to go electrified, trying to get us off fossil fuels. And there seems to be a reluctance to go above the 10,000 level on LME copper. It is an interesting story. Background story is fascinating, I think, for copper. But what are your thoughts on that chart?
Yeah, I think this is probably my highest conviction sort of multi-year allocation, in large part because what you just said, right? The electrification of the world, we are way behind in terms of what we need in terms of copper, nickel, other things like that. And individual companies like you mentioned some of the some of the individual names, Freeport-McMoRan is another one. So there's just so much secular demand here. It's hard to see this not working a lot higher. I really think copper can easily double over the course of it can happen quick. It can take a couple of years, and that's a big move, right? But at this point, if you want to just be this is just the copper futures on COMEX, but all the charts are going to look the same if you look at a different ticker, like a CFD or something like that. We had that breakout finally above the 460, 70 level, classically broke out. Now we're retesting, and I think ultimately this is probably going to resolve back higher. So, same thing like some of the other things talking about gold. I certainly wouldn't be short this. I think the real demand is way too serious. So would want to be a buyer of this on dips. It's the one thing I'll say about these things, particularly copper, this stuff's volatile, as people are finding out. So, I approach it more from building a core position, whether it's through an ETF. I try not to do it with futures because you have to roll it all the time. So maybe an ETF as a core holding, and then kind of use leverage, whether that's options or futures, to get back in from a momentum perspective when momentum on the upside starts to pick up again. But very bullish story.
Yeah, look, Serge, just wanted to just wanted to pick up on one final area with you before we went to air on this. We did discuss sterling dollar. I know it's not your specialism, but just to give a little bit of background to this, we've got an election coming up here in the UK. It certainly seems like the opposition Labour Party is going to win. Markets like the price in future events, and if they're fairly sure about this, it'd be interesting to know technically what your thoughts are from a chartist point of view on where we are with sterling dollar. And the client question was, in the run-up to the election, which is the 4th of July, are we more likely technically to go to 129 for sterling dollar or down to 124? That was the question. So technically, let's just confine it to the directional travel of the chart at the moment.
Sure. One thing at the 4th of July is also when the dollar markets are going to be closed. So this just FYI. And this is across, of course, 4th of July being Independence Day in the United States. So we have the dollar markets closed as an FYI. Interesting date to have for that. Look, purely technically speaking, there's a lot of support here on sterling. I would think it's 129 rather than 124 as the next stop. But we're talking about a news event here, right? The elections, and that can gap things all over the place. So I try not to play the news too much because they can be gappy, but I think the path of least resistance would be 129 as opposed to 124. Again, simple technical stuff here, and all the sort of the longer term moving averages kind of coming together. We call this the spaghetti consolidation. So it really will take a pretty nasty news event or pretty gnarly news event to break below all this support. It can happen. It happened before. But I think at this point, the momentum here would favor 129 as a next stop.
Cool. Look, thanks so much for covering that. I appreciate you with your comments around all this and the rest of the last 50 minutes. Interesting tour around some of the markets. Serge, thanks indeed for your time.
Thank you.
That's Serge Berger from steadytrader.com, and you can catch up with him on his website. He has a Twitter account or an X account where he talks about the markets, and you can speak to him through that. That's Serge Berger from steadytrader.com.